people are doing very little in the way of research. They're spending a lot of time on momentum. But when we look at the research, if you're actually looking at companies and the fundamentals, the U.S. cannabis names are screaming buys at this point.
Charles Taerk joins me now, CEO of Faircourt Asset Management, portfolio manager of the Ninepoint Alternative Health Fund. Charles, welcome back.
Thanks very much, Jim. Great to see you.
Great to see you too, Charles. Charles, I see that the portfolio of the Ninepoint Alternative Health Fund is still positive on the year after the sector, by all accounts, touched a bit of a peak back in February of this year. What happened to make that sort of the peak of the year, and is there any respite in the future?
Sure. Well, there's lots of upside. Still, we see a lot of catalysts for the second half of the year, but what happened in the beginning of the year, there was a lot of investor exuberance. You know, the Senate race in Georgia, the runoff that put the Democrats in control of the Senate. I think that retail investors had an unreasonable and very short-term idea that federal legalization was going to happen by March 31st. And so everybody plowed into the sector with a very unrealistic expectation. Now, despite that, the companies in the US continue to do very well. So fundamentally, there's nothing wrong with the sector in the US. In fact, you know, the first half of the year has been quite strong, but investor expectation at the beginning of the year was, you know, unglued from reality.
Yeah, well, so that's interesting because we've seen that sort of exuberance manifest prematurely on multiple occasions throughout the long life of the cannabis sector at this point. And I guess that's just a characteristic of cannabis investors who tend to be less sophisticated than other investors.
I don't think so. I think it's retail investors in general. You know, if you look at what has taken place this year with other sectors, whether it's tech or the meme stocks, there's a lot of groups of investors that move in and out of various names. And I think that's just been happening with cannabis, very similar to you know, what was happening with everyone had to be in AMC, or everyone had to be in what was the other meme stock, GameStop, right? And people are doing very little in the way of research. They're spending a lot of time on momentum. But when we look at the research, if you're actually looking at companies and the fundamentals, the U.S. cannabis names are screaming buys at this point.
Sure. And is that your assessment based on their earnings and their quarterly reports?
Yeah, so in the middle of August, we had all the U.S. multi-state operators come out with their second quarter results. So for the first half of the year, all of these companies have executed, have performed actually above expectations. Most of the companies in our portfolio that are in U.S. cannabis have beaten expectations, have strong guidance, have strengthened guidance, or have suggested that they will outdo previous forecasted guidance for the balance of the year. And I just think that people aren't paying attention to it. You know, you got a company like Columbia Care as an example. They did close to $110 million in the quarter in revenue. That's an increase of over 200% year over year. But profitability, and this is the big difference between the Canadians and the Americans, these US companies are profitable. Their positive cash flow is significant. And so, you know, you're able to generate quarter over quarter revenue growth, quarter over quarter EBITDA growth, and reaffirm guidance. And that's not just Columbia Care, it's Columbia Care, Cresco, Green Thumb Industries, Trulieve, Curaleaf. All of these companies have come in with solid operations. And that's really why we do a lot of table pounding on the US names relative to Canada, because they're continuing to execute, they're continuing to move into new markets, and continuing to generate positive cash flow, most importantly. So the valuations are really the things that we can't fix. We can only keep telling people to look again.
Right, right. So then what are the main catalysts then that are driving the performance in the U.S. sector?
Yeah, so, well, the catalysts that should drive the sector really, in the second half of this year, we're seeing a number of meaningful changes that are going to take place that we don't think people are really paying much attention to. So, number one is what's going on in New York. You know, Governor Cuomo has now resigned, and the new interim governor is much more favorable on cannabis legislation than Governor Cuomo. And so the kickstarting of adult use legislation in New York is going to get a needed restart. That's number one. But also just on the medical side, before adult use starts, which will likely start in 2023, there is the ability to bring on smokable flower in New York for medical purposes. And if we look at what that did in Florida a year or two ago, when smokable was brought in addition to the extracts, the market took off in the medical-only state of Florida. So we see similar growth for the 9 public companies that have licenses in New York State. That's number one. And there are only 10 licensees. So 9 of the 10 are public companies. And the names that I just mentioned are most of those licenses. Second, also in the Northeast, we look at New Jersey. New Jersey has already established its adult use program. They've come out with rules recently, and they may start the adult use market in Q4 of this year. There's a lot of expectation that it won't happen until next year. So a lot of forecasts don't include any of that adult use revenue that could hit the books this year. Mm-hmm. Then you've got regulatory changes. And although we've said, you know, there was an unrealistic expectation in 2021, the clock is now ticking on the Democrats, because a year and a bit from now are the midterm congressional elections. And if the Democrats want to win control of the House and maintain control of the Senate, they need to show that many of their leading platforms that they ran on in 2020 have come to fruition. One of those is cannabis. They talked a lot about legalization. And I think that right now what you're going to see is a lot more discussion and a lot more negotiation in the Senate and in the House about what are the provisions of cannabis legislation that can get passed. You know, there is the long bomb, which is full legalization, federal legislation to deschedule cannabis, SAFE Act, MORE Act, all these things. But I think what needs to happen is they need to start with safe banking. These companies are sitting ducks because they all hold cash in dispensaries. It's not safe for employees. So from a federal legislative standpoint, that's step one, but it's a big issue. Getting national banking access to the cannabis industry will be huge. It also lowers their cost of capital when they're borrowing. So that's going to be a big one. But we think that tied to safe banking will be SEC legislation to allow these companies to uplist, and there'll also potentially be some tax treatment changes. Those 3 would be significant for the U.S. multi-state operators, and they continue to build a moat around their businesses because federally cannabis hasn't been legalized. So they can become stronger, they can build their business, go state by state, preventing pharma, preventing CPG companies, and preventing the Canadian companies from coming into the U.S. So that's why we're feeling very strongly about the U.S. companies.
Sure. I don't hear very much about Canadian companies at all, ever anymore. And is Canada as a geographical representation of the cannabis industry really being left in the rearview mirror by the United States at this point?
Yeah, I think that, look, we're 37 million people. We're smaller than the population of California. But then you have to look at the regulatory regime here. We got off to an early start, but there are edits, if you will, that I think should be put in place to allow the industry to flourish more than it is. And what I mean by that is the extensive limitations on marketing, branding, and education. That's really what's hurting the industry in Canada. Whereas when you look at the US, because of the state-by-state nature of the market, these companies are being allowed to market their products and educate the naive customers. So they can learn about what moderate levels of THC can do for sleep patterns or relaxation. And whereas in Canada, the only way you can get educated is by going into a dispensary. So there's great limitation in Canada. There's also significant tax burden in Canada. And so as a result, the Canadian companies are still finding it very difficult to turn a profit.
Yeah, you bet. All right, Charles. Well, that's a great update. Thanks for your time as usual, and we'll look forward to talking to you again in the future.
Great, Jim. Thanks very much for having me.
You bet. Bye for now.